On Saturday, Warren Buffett, the chief executive of Berkshire Hathaway, a $400 billion company, just sold all of their stocks in the US airlines. He was a shareholder for the 4 major airlines, and he actually accounted for 10% of the entire US airline industry. When something like this happens with such a high profile personality, such a successful investor on such an enormous scale, we need to perk our ears up and start paying attention to the why. Why has he made these decisions, and what can the overall implications be for the market? And how are we supposed to interpret this information? What does this mean for our own investment portfolios and whatever investments we plan on making? But don't worry, because Buffett actually did suggest where he would be investing his money if he was the average American investor. So pay attention to that, because that could be the best solution for you. And it's something I personally believe quite strongly in as well. So let's get stuck into it right now. So the first thing I want to look into is the why. Why did Warren Buffett decide to pull all of his stocks out of the 4 major US airlines? The world has changed for the airlines, and I don't know how it's changed, and I hope it corrects itself in a reasonable and prompt way. I don't know if Americans have now changed their habits or will change their habits because of the extended period, but I think there are certain industries, and unfortunately, I think that the airline industry, among others, that are really hurt by a forced shutdown, by events that are beyond our control. But not only that, when he was asked to clarify if he had sold all of his stocks in the airline industry, he replied with just simply, yes. And just by the way, his initial investment in the industry was $8 billion. And then he was asked why. And this was his response. He said that he made an understandable mistake when valuing the airline stocks. When we bought, we were getting an attractive amount for our money when investing across the airlines. It turned out I was wrong about the business because of something that is not in any way the fault of 4 excellent CEOs. Believe me, no joy of being a CEO of an airline. I don't know that 3 to 4 years from now, people will fly as many passenger miles as they did last year. You've got too many planes. Now, this is where any good investor would start to read between the lines, because while he's directly talking about the airline industry, it has a lot of implications for the overall market and many industries that are suffering. So while at first it might look like, oh, he's sold out of his shares, the market's dropping, everyone's going to panic and sell all their stocks, there's going to be an amazing discount when the market opens on Monday. And that might be true, but also we need to look at the big picture, the overarching what is going on with the industry and the economy overall. And the big picture in this situation is we don't know how hard and for how long some of these major companies are going to suffer from this pandemic. So reading between the lines, in my opinion, Buffett's complaints, while they are specific to the airline industry, and he suggested he hopes that it has a prompt recovery, but his actions, pulling all of his stocks, probably suggests that he doesn't expect it to recover anytime soon. Now, I want to make something really clear here, guys. Buffett pulling his stocks in the airline industry is not representative only of the airline industry. It is representative of the market overall. And he goes into some of his thoughts, which I'll go through with you right now. We've not done anything because we haven't seen anything that attractive. We are not doing anything big, obviously. We're willing to do something very big. I mean, you could come to me on Monday morning with something that involved 30 or 40 or $50 billion. And if we really like what we're seeing, we would do it. And that just shows you that even Warren Buffett doesn't have a great deal of confidence in the immediate stock market. If we read between the lines here, the impression he's giving us is that he doesn't feel comfortable putting big investments into anything at the moment because he can't see any value in any particular sector, industry, or company. Now that is worrying signs for the overall market, and Warren Buffett predicts the overall market better than almost anyone and has done for over 50 years. So when he says he can't find anything attractive in the market at the moment, that leads me to believe that he's worried about where the market is heading. For such an active investor to sit back and not put lots of money into the market, that makes me think that all these people who are thinking everything's on discount, there's value everywhere, maybe that's not quite the case, and maybe the worst is yet to come. So one of his first suggestions is be careful about how you bet. I don't believe anyone knows what the market is going to do tomorrow, next week, next month, next year. I know America's going to move forward over time, but I don't know for sure, and we learned this on September 10th, 2001. And we learned it a few months ago in terms of the virus. Anything can happen in terms of markets, and you can bet on America, but you're going to have to be careful about how you bet, simply because markets can do anything. We all know that stock markets are unpredictable at the best of times, and recessions act differently again. And this is a whole new type of recession. And what's really interesting so far is even though the American economy and the global economy is showing a really strong downturn, we are also seeing a really big upturn in the stock market until Friday. So what Buffett is first suggesting, which I've just gone over there, and I'm going to go over another very significant suggestion again in a minute, but this suggestion was be careful. He's not saying don't invest, he's just saying be careful. Now, probably one of the most interesting parts of this entire discussion and this meeting, for me at least, was what he suggested we should be considering investing our money in. And that's what we're all waiting for. We all want to know, how can we invest in the smartest way that is safest for our future and our money and our investments? And funnily enough, it is a concept that so many people have never heard of before. And his comments were this: the best thing to do is buying S&P 500 index fund. So I'll read his comments first, and then I'll explain it again just in case there's any confusion, because it's really important to understand what he's trying to get across here. In my view, for most people, the best thing to do is owning the S&P 500 index fund. There are huge amounts of money that people pay for advice that they really don't need. If you bet on America and sustain that position for decades, you do far better than buying treasury securities or far better than following people who tell you what to invest. Now, there are probably many of you out there who are sitting there thinking, how do I buy the S&P 500 index? Don't I buy individual companies that are within the index, like individual stocks? Now, the answer is actually that yes, you can buy the entire index, and you can also buy individual stocks if that's what you prefer. But what Warren Buffett is suggesting in this article, and what he's been talking about for many, many years, is invest in the overall market. That is the same as investing in America. So if you believe that America is going to be prosperous and successful and be a really good, solid country that will rebound and go upwards for decades and decades to come, then your best bet is betting on the S&P 500 index. And it applies for any country that you live in. If you believe in your country and you believe that your country will be prosperous, that is one of your safest bets. You will usually find that over a long period, 10, 20, 30 years, it is almost impossible, and I really mean that, it is almost impossible to consistently outperform the overall market. So why not just bet on the overall market? Bet on your country being successful. So he goes on to say, the economy faces extraordinary range of outcomes, but nothing can stop America. In 2008 and 2009, our economic train went off the tracks, and there were some reasons why the roadbed was weak in terms of the banks. This time, we just pulled the train off the tracks and put it on a siding. And I don't know of any parallel. In terms of a very, very well, the most important country in the world, most productive, huge population, in effect, sidelining its economy and its workforce. But even facing that, I would like to talk to you about the economic future of the country, because I remain convinced, as I was convinced of this in World War II. I was convinced of it during the Cuban Missile Crisis, 9/11, the financial crisis, that nothing can basically stop America. Whew, chills, guys, chills. He has such strong words of confidence about America overall, and he has always expressed these feelings. He believes in the overall prosperity of America as a nation, as a country, as a world powerhouse, and he believes that betting on America is the best thing that you can do with your money. And I'm not a financial planner, I'm not a financial advisor, I would never give active advice on how you should spend your money, but I personally fall into the same camp. I really strongly believe that betting on your country, if you think that it will prosper, is the best and safest and smartest way to invest your money. And just by the way, if you don't know a lot about index funds, please let me know in the comment section down below, because I would love to do a video explaining that for you. Now guys, the real takeaway from this Berkshire Hathaway meeting was not just about the airlines and the fact that they pulled their stocks, but it really paints an overall picture of how these big, savvy, wealthy, billionaire investors are seeing the markets right now. And if you're already invested in the market and you're panicking, don't. It's okay. The market could do anything. Like I said, we don't know. And you never This is important to remember, guys. Please pay attention to this. You never lock in a loss until you sell. All of your money is hypothetical. It's all up in the cloud. And until you sell, you do not make any profit. You do not make any loss aside from dividends. But despite that, you don't make a loss on your money until you hit the sell button. Never forget that. And for those of you out there who are on the other side of the fence and you're waiting till the market hits the very bottom so you can get in at the bottom and wait till it goes to the top, that's another strategy that is really misconstrued. There is a time-old saying, time in the market is better than timing the market. The longer you hold your stocks, the more decades that clock up, the more money you will make in the long term. Predicting the bottom of the market versus predicting the middle of the market is really nowhere near as significant as you think when you're talking about 20, 30, 40 years into the future. So please remember that. Time in the market is more important than timing the market. All right, guys, thank you so much for joining me today. I really appreciate it. Please hit the like button if you enjoyed this video. Comment down below if you have some of your own thoughts. And also if you want to see me do a video on index funds, because I think that's a really important topic to cover. And I think it's something we should all at least understand. Please subscribe if you haven't already. And until next time, I'm Dan, and you've been Dansplained. See ya!